Dan Willis here, and we're talking about a low credit score and specifically the 5 factors that go into your credit score. And we're specifically talking about your FICO credit score. As we shared here in an earlier video, FICO is the only one that you need to worry about. Over 90% of lenders use FICO as their credit score. So only concern yourself with that. And these 5 factors are the approximate value because you have more than one FICO score. You have a Experian FICO score, a TransUnion FICO score, and then you also have industry-specific FICO scores. For example, if you're applying for a mortgage, that industry might have a specific FICO score algorithm that they use. Nevertheless, the first item and the one that's most important is your payment history. This is worth roughly 35% of your overall FICO score, and this looks at every account on your credit report, all the positive and all the negative items, because as Dr. Phil shared, the best predictor of someone's future behavior is their past behavior. Again, that's your payment history. That's worth 35% of your overall credit score. The second item is your amounts owed, and this has a misleading name. It's also used to be called your utilization ratio, and it does look at your total debt. But having a lot of debt, such as student loans or a big mortgage, that's not necessarily bad for your credit score at all. Instead, you want to focus on having available unused credit. For example, with a credit card, if you have a $1,000 limit and you have a $200 monthly balance, then you'd have $800 of available unused credit, compared to the guy with the same credit card, $1,000 limit, and his monthly balance is $980 and he only has $20 of available credit. It makes sense having a lot of available unused credit, and that does focus on revolving credit lines, such as a credit card, revolving credit lines like a credit card. And the big takeaway here is not to minimize your debt, but rather to maximize your available unused credit. And as a rule of thumb, for credit cards, especially in revolving credit lines, it's good to keep a monthly balance at about 30% of your total limit. Using our earlier example of $1,000, that'd be a monthly balance of about $300, giving you $700 of available unused credit. And if you'd like some help, you can get a free credit consultation by calling toll-free 1-877-418-7596. Now, the third item is your length of credit history, and this is looking at how long you, as a human being, individual, have been using credit, and then it also looks at the age of each specific account on your credit report, and generally, the older the better. That's worth 15% of your FICO score. The fourth item is your credit mix. What type of credit do you use? Do you have credit cards? Do you also have a mortgage? Do you also have a student loan? Do you have a car loan? Generally, and the idea is the more diverse, the better. But again, that's only 10% of your credit score. And the fifth item is new credit. How often are you applying for new credit? You can do some rate shopping. You won't be penalized for rate shopping. And with normal use, all 3 of these last 3 items, new credit, credit mix, and length of credit history, will all be fine with normal use. And if we didn't share new credit, that's worth 10% again of your FICO score. Just those 3 items, that's only 35% of your FICO score, and that's being generous about it. If your focus is to have better credit, you need to focus your efforts on those first 2 areas, your amounts owed and your payment history, because together that's 65% of your total credit score, and our hunch is that it's probably a little bit more. Look, all these alphabet soup laws that you've heard about, from the FCRA, Fair Credit Reporting Act, to the Fair Debt Collection Practices Act, FDCPA, those are the 2 big swingers, but those are all passed to protect you. All those laws are there for you to use. It's not passed for the credit bureaus or the debt collectors or any of those other guys. It's there for you to use, literally. These politricksters passed it, for the idea being to help you and to protect you. Your credit score is a lot like your GPA, grade point average, and glory school days passed. It doesn't matter if you're acing all your courses if you're failing gym class, because that negative mark is going to obliterate and drag down your credit score. The same principle applies, to your GPA. The same principle applies to your credit score, and this is why it is so imperative and so crucial and so critical to remove any of those dings, those blemishes, or those negative items from your credit report, because chances are that's what's pulling it down and really killing your credit worthiness. We encourage our members to consider professional, legal, and legitimate credit repair firms to help with this because in 2016 alone, over 9 million negative items were removed from consumer credit reports. One of the best firms is the Credit Pros. They've successfully helped their clients remove collections, late payments, charge-offs, judgments, repossessions, foreclosures, even bankruptcies, and so many more negative credit report items. If you'd like some help, you can get a free credit consultation by calling toll-free 1-877-418-7596. Again, that's for a free credit consultation, and the toll-free phone number is 1-877-418-7596. This is Dan Willis. We're going to include a link in the description below over to an article on our website for the full story. We also have a free report available there, the 7 proven ways to boost your credit score. And of course, subscribe and join our congregation. Have a wonderful day and looking forward to talking to you again here soon.